Good morning, everybody. Welcome to another Daily Mark brought to you by Mike York. Today is Friday, May 29th. Wow, short week this week, huh? It is a happy Friday. I hope you guys have a great up and coming plans. Now things are kind of loosening up. We got a lot of data to go over today, so we're going to jump right into it. We'll start off with the personal income for the month of April. Now, month of March, obviously, we saw a bit of a drop in personal income due to job losses and everything else. So we had a drop of 2.2%. Forecast for April is calling for another 2.1%. However, it jumped up 10.5%. Now, why could this be? We're actually thinking this could be due to a discrepancy or disparity between those who still have the jobs in the company and those who lost their jobs. Now, the job losses, most of it was temporary suspensions or whatnot, were on the lower level on the pay scale. And we think because of that, that's why you see kind of a discrepancy here in the personal income. We'll find out this more as more and more people are going back to work, but uh, that's why we think this number looks a little skewered a little bit up compared to what we probably should be seeing. On the other hand, we got consumer spending. So obviously, we had a pretty big bad month in March where it dropped 6.9%. Forecast is calling for a drop of 13% and exceeded that, a drop by 13.6%. So we had a pretty big drop off in April for consumer spending. Now we get the Fed's favorite gauge for inflation. We get the personal consumption expenditure, and then when we strip out food and energy, we get the core inflation or core PCE. So this is also known as PCE by its abbreviation. So we'll start off with the PCE. We had a drop of 0.2% back in March. In April, it dropped another 0.5%. Now its year-over-year appreciation level dropped from 1.3% all the way down to 0.5%. Uh, and the core, again, this is where you strip out food and energy because those are variables that you cannot control. This is the Fed's favorite gauge for inflation on the consumer level. It went from 0 to minus 0.4%. Now, its year over year dropped from 1.7 all the way down to 1% on this. Those are some pretty big drops right there. The Fed's target rate for inflation is at 2%, so that's pushing us way in the other direction for inflation. The reason, obviously, for the PCE, the main headline number, why that's so much different from the core is because oil had those big drops over the last couple of months from earlier in the year. Now let's move on here. We got Chicago PMI. This is the manufacturing data out of the Chicago region, and in April we had a 35.4, which is quite low. Anything below 50 is in contracting period, and here we had a 32.3, so it even contracted a little bit more in May. Last but not least, we had the month ending at 70 for a month of May of April, the 71.8 for consumer sentiment. So people are feeling a little bit better, but not that much. They're still kind of getting it. So we'll see. The forecast at 73.7, but came in a little under at 72.3. So people are feeling slightly better, but not really that much difference from last month. So as we get more into the summer and things start opening up, we'll hopefully see this also improve a bit more. Stocks are down this morning. It has to do with this new presidential news conference. There's an announcement that the president will be addressing the public around 11 o'clock a.m. Pacific Standard Time this morning, and it has to do with China. There was concerns that potentially that he could be thinking of lifting the special status on Hong Kong, or kind of going against what we were talking about with the Phase 1 deal. So this has got investors a little bit jittery right now. So as a result, money's coming out of the stock market, and you'll see coming up here in the mortgage-backed securities. Also, Fed Chair Powell was on a webcast. He was doing Q&A at Princeton, and it was being broadcast via webcast. People could watch. There's question and answers, basically saying that he doesn't feel that we have to go to negative interest rates at this time. So as of yet, he's still resisting a negative interest rate environment. He feels that he has plenty in the tool chest, so to speak, as to fight and get the economy back in line. He is concerned of a possible second wave of the coronavirus. He feels that inflation's obviously very subdued, and much lower than obviously what they would like it to be. So he's watching all those different things, and he feels that he's got plenty of room on the balance sheet to keep acquiring assets as they need to be done. So again, as we mentioned, let's see how the mortgage-backed security is doing. We're up about 14 base points, but as you can see, this is getting much more narrow, and at some point, we're going to have a catalyst as to push it either downwards, which will worsen, rates will worsen, because as you can see here, we got a lot of room here, and the more that drops, the more rates will rise. If we can break above the 25-day moving average, we can obviously have some room here for improvement and get better rates. So with this announcement with President Trump, that could be a catalyst. If he says stuff that investors are worried about with China, that could make the stock market even go further down. They are due for a correction, and that could help us out and get some improvement in our rates. So keep your eyes on the market today, especially 11 o'clock a.m. Pacific Standard Time or 2 o'clock Eastern Time. Watch that and see how the market reacts to President Trump's announcement. That could give you a gauge as to which way the market will move later in the day here today. But as of right now, mortgage rates should be a little bit better than what we saw yesterday, as we're up about 14 basis points. 10-year Treasury is down. It's resting up just on top of its 25-day moving average. Is at about 6.6 right now, and that could also be a catalyst to push it much lower to help out mortgage-backed securities to go upwards. All right, so that's pretty much the wrap for the day. And if you guys are in California and looking to buy or refinance, please reach out. You can direct message me or email me are the two best ways to contact me. Email is the fastest. If you guys are ready to go, I'll put a link inside the description, and you can start answering some questions, and we'll get into contact and get started from there. Again, look forward to talking to you guys soon. Hope you guys enjoy your weekend, and we'll look forward to see you guys on Monday. Take care. Bye-bye.